Good morning, Bay Area. This is your Bay Area mortgage planner, John Payne, and this is the RateWatch Now Daily Update Report. Happy Thursday, everyone. Here's a snapshot of the mortgage-backed securities market yesterday. You can see we had 3 price alerts, but we're pretty much looking at a decrease in pricing and rates, or an decrease in pricing and increase in rates. Excuse me. What's going to make rates go up today? You know, the PPI number came out, and it was pretty good. When you look at the headline numbers, it says that it's 0.4%, which is 5% annualized. However, you have to strip out food and energy, which is very volatile, and that gives you the CORE PPI, which is about 0.1%. Now, PPI is the Producer Price Index, which is the wholesale rate of inflation, and it's the leading indicator for CPI, which is due out tomorrow. Just a lot of little information I just wanted to throw in there. Also, jobless claims. It's down again, yippee, but I'm not too strong on this. The problem is that it fell, yes, but we're still way too high, and a little drop means nothing. We need to be below the 300,000 mark to matter, and currently we're at 450,000, and I'll show you a chart on that and what I mean in a minute. I don't want to be labeled as a real pessimistic person, but it's not enough for me to really move the market. What's going to make rates go down? Here's a good example. FedEx News. FedEx comes out and says, we've doubled our earnings. Wait for the other shoe to drop, but we're about to cut 1,700 jobs. Double their earnings, and now we're going to make it even more profitable because we're about to fire 1,700 people. That is the problem with the economy and why we're not going anywhere. To back that point up even more, foreclosures are up 25%. So more people are still losing their jobs. Corporations are making all of this money, holding on to the profits, slashing their payrolls, which making the economy even worse because now when you lay off all these people, now their homes go into foreclosure. Is anyone connecting these dots out there? It's just amazing to me. Here's a snapshot of the unemployment claims. If you were to take a line and just draw it across the 450 mark here, you will actually see, because that's about where we are right now, you can actually see that we're at the second highest point since the middle of this whole recession period started. So that's what I'm saying. You know, having it drop a little bit is irrelevant. We need to be down in this area in order for it to make sense. Here is how the market is reacting. Again, I think that is somewhat foolish for the market to be going this way. It's unfounded. Jobless claim drop is not that big of a deal. PPI, although, was a good deal, that we aren't looking at inflation, so that may be a little reason why we're seeing what's happening. This is how the lenders are adjusting their pricing and rates according to the fundamental and technical news. And speaking of technical news, this is the same pattern we were at yesterday. And I said that we were either going to break out. Well, look at yesterday. We went up and tested the downward slope. We're looking at testing we're almost there testing the bottom ridge here, the floor. Now today we started out a little lower and we actually went through this floor. Will we continue to fall? Yet to be seen. You know, I looked at historical charts when we were at this exact same point, and modern history, we broke through in the upward slope. Not sure if we're going to be as lucky this time around based on what I'm looking at here. But for long term, though, however, I'm still bullish on bonds, just so you know. In summary, core PPI is good. Again, if you strip out food and energy, we at 0.1%, which is excellent. Jobless claims have hardly moved. They've hardly moved at all. And FedEx is a great example of why this recovery is slow. the Fed will step up their buying of treasuries. Now, I'm not making this assumption. They've already said that they're going to do this. People continue to lose homes at an alarming rate. Fundamentals, nothing materially has changed at all. And technically, the charts are reflecting both hope and concern. This is all I have for you today. Make it a great day, Bay Area. If you know of anyone that could benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.